Hello dear students, welcome to Devika's Commerce and Management Academy. Profit prior to incorporation. This introduction I gave you, did you follow? Few points you have to remember. Allocation of expenses, whether it is on time basis or sales basis, post or pre. So these four columns, did you prepare? Are you thorough? Then only come to this problem. Today we'll work out one problem. The problem is given on the desktop. This side, right side, it is given. You can just read the problem. I'll explain this problem, then after that we'll go for solution. See the problem. RG and Company Private Limited was incorporated on 1st July 2016 to take over the business carried on by RJ and Brothers. RJ and Brothers company is taken over by RJ and Company. RJ and Brothers company is taken by RJ and Company Private Limited as a going concern with effect from 1st April 2016. They have purchased on 1st April 2016 but incorporated on 1st July 2016. Okay. Following is the information for the last year, for the year ended 31st March 2017 of RJ and Company Private Limited. Now what is given to us? Trading and profit and loss account. Trading account, debit side, opening stock, purchases, gross profit. We don't want opening stock or purchases. We need only the gross profit. Okay. Gross profit in which ratio? Sales ratio. Okay. Did you remember? And on the credit side, sales are given. Sales are useful to calculate the sales ratio only. We don't take it into the profit and loss account. We are going to prepare profit and loss account. In profit and loss account, we never get the sales. So this is useful to calculate the sales ratio. And what did they say? Sales in brackets up to 30th June 2016 1 lakh. Out of 3 lakh up to 30th June 1 lakh means rest of the 2 lakh are after 30th June till end of the year. Okay. So this is about trading account. Trading account, what do we need? Only gross profit for allocation of gross profit in the proportion of sales. Sales we are taking to calculate the sales ratio. Now coming to the profit and loss account. Profit and loss account, debit side we have given administrative expenses. Administrative expenses means how do you calculate? On basis of time, on time basis. Okay. Director's fee, this is directly we can post. Okay. Company expenses, I told you now all company direct expenses are posted directly into the post. Director fee, post. Selling expenses based on sales. Audit fee is based on time to time we'll pay audit fee, so based on time. Preliminary expenses, these are related to the company directly, so directly post. Net profit, anyway this is not required, we are going to find out. Now you are required to prepare a statement of profit and loss showing the profit earned prior to and after incorporation, and state how the profit earned during the respective periods may be dealt with the accounts. Now right now this problem I am taking from the Kalyani Publications problems. This is advanced accounting, Kalyani Publications. Okay. So what we have to do is, first thing is that we have to calculate the sales ratio, time ratio. Working notes we have to show. Then we'll go for the profit and loss account. Profit and loss account, simple. Debit side all the expenses, credit side gross profit. That's all we are going to write. But on which basis? That basis we have to calculate in the working notes. So in working notes, first time ratio calculation. Time, if you see the problem, time ratio, it is here 1st July. So they have purchased it on 1st April 2016 but incorporated on 1st July. So purchased on 1st April 2016 and incorporated on 1st July 2016. Until what year? 31st March. 31st March is year ending. Okay. Purchased on 1st April, incorporated 1st July, and year ending is this. For time basis, we have to calculate this based on time only. So calculate this purchase to incorporate. This period time is how much? April, May, June, 3 months only. So 3 months. Okay. And from incorporate to year ending, here 6 months and here 3 months. Total it comes to 9 months. Okay, 3 months and 9 months is to 9. 3 is to 9 generally time ratio. This we can simplify it, more simplifying. 3 1s are 3, 3 3s are. So it is 1 is to 3. So time ratio is 1 is to 3. Then we'll go for sales ratio also. Time ratio, did you follow? Date of purchasing, registration, incorporation and year ending. So this period is 3 months and this period is 9 months. So 3 is to 9. If you simplify, we are getting 1 is to 3 ratio. This is time ratio. In the same way, sales ratio also. Period is same. Period is same. Sales ratio, this same period I have written. Now in the problem they have said that till 30th June sales are 1 lakh. Means this period to this period, 30th June. So this is 1 lakh. Rest of the 2 lakh, total they said 3 lakh. Total they said 3 lakh. Out of 3 lakh, this period is 1 lakh. It means rest of the period is 2 lakh na? Understood. Right. So this is 1 lakh and rest of the period is 2 lakh. Now we have to take the ratio of this sales, not the period. Time period already we have taken. Sales ratio we have to take. Sales are here 1 lakh and 2 lakh. 1 lakh into 2 lakh ratio, if you take it out, cut out all the zeros. So it comes to 1 is to 2 ratio. Sales ratio is 1 is to 2. Are you getting it? Sales till which period, how much is the sales? This period is 1 lakh and rest of the period is 2 lakh. That ratio we have taken, 1 is to 2 ratio. And here it is time period, 1 is to 3 ratio, you got it. If you understand, if you have done this and preparation of profit and loss statement, very easy. Did you follow this? Yes. Now coming to the, after working out this working note, then we can go to the direct problem. We are giving the heading of RJ and Company Private Limited statement of profit and loss. Statement of profit and loss. So profit and loss account, it is, how do you start? Always with the gross profit. Gross profit on the credit side. Gross profit. In the problem it is given gross profit is on the debit side of trading account, right? So how much it is? 75,000. So gross profit is here 75,000. 75,000 on basis of sales. Sales ratio is 1 is to 2, right? 75,000 into 1 by 3 comes to 25,000. Okay, this is 75,000. If you want, I'll write it here. Gross profit is 75,000, just for our understanding. Okay, 75,000 into 1 by 3 is 25,000. In the same way, 75,000 into 2 by 3. 2 by 3 means 50,000. Okay, 70,000 we have distributed in the ratio of 1 is to 2. 25,000, 50,000. First gross profit you have to distribute on the basis of sales. Then rest of the expenses, as I explained, rest of the expenses. First expenses is given here, administrative expenses. Administrative expenses, as per the time I said, right? Administrative expenses are total 18,000. Okay, 18,000 on the basis of time means 1 is to 3. 18,000 into 1 by 4, 4,500. 18,000 into 3 by 4, 13,500. Like this, administrative expenses on the basis of time. Next, director fee. Director or director, whatever you want. Director fee. So this is directly you have to post. Post it directly because it is related to company. Post means post. By the way, columns, you know, particulars, basis, prior to incorporation means this period. This period prior to incorporation, and second one is post incorporation means this period, prior, post. Okay, so prior to incorporation, post incorporation in this ratio. If it is time ratio, 1 is to 3. If it is sales ratio, 1 is to 2, right? And where is director fee? Director fee is here, directly can post it directly, no need of prior, and no need to take either sales ratio nor time ratio. Okay, next, after director fee, selling expenses. Selling expenses always on the basis of sales. Selling expenses are how much? 36,000. Okay, 36,000 on the basis of sales. No, sales is 1:2. 36,000 into 1 by 3. It is 12,000. 36,000 into 2 by 3. 24,000. Okay. 36,000 we have divided. Next, audit fee. Audit fee is 1,000. Audit fee always on basis of time. 1,000 into 1 by 4, 250. 1,000 into 3 by 4, 750. Next, other expenses, preliminary expenses. Preliminary expenses are related to company. Post it directly. Preliminary expenses post here. Only these two expenses post. Director fee and preliminary expenses. Rest of the expenses either on the basis of sales or basis of time we have allocated. Okay, after allocating, just like profit and loss account, generally most of the time you will find credit side more. 25,000, 25,000 minus these three amounts, 4,500, 12,000 and 250. You are getting 8,250. So this is prior to incorporation, means this period we got a profit of 8,250. And on the post incorporation, 50,000 minus all these expenses, 13,500, 3,000, 24,750 and 3,000. If you deduct all these expenses, you are getting 5,750. So this is at this period you got a profit. So one is prior, this period 8,250, and post means this period you got 5,750 is the profit. Very simple. Shall I give you recap? First take the screenshot, then I'll give you recap. You have to work out in the same way in the exam also. Simple profit and loss account, you open it. For profit and loss account, generally particulars amount, right? But now here, a debit side, you'll have 3 columns. Particulars, 4 columns, sorry. Particulars, basis, prior to incorporation and post incorporation. Same columns on the credit side also. Particulars, basis, prior to incorporation, post incorporation. Right? So you'll be starting this problem first with working notes. Sales ratio and time ratio you have to find out. Time ratio like this. For time ratio, when they have purchased this period. Okay? And when they have incorporated, that is this period. What is the end of the year? These 3 dates if you know, the first purchase to incorporation, that is 1 period. Okay, pre. And incorporate to year ending is post. How much is this period? 3 months. And how much is good the rest of the period? 6 months. So 3:9. If you simplify, 1:3 got it. In the same way, sales ratio. This period, how much was the sales? 1 lakh, they said. This period, 1 lakh. And the rest of the 2 lakh is rest of the period post, right? So 1 lakh and 2 lakh. This ratio, if you take it, 1:2 ratio. Once if you have calculated these 2 ratios, simply you can start the problem. First you will be starting with gross profit. Gross profit is 75,000. So taken in the ratio of always sales. Sales ratio 1:2 we have distributed. In the same way, all the expenses, you know that administrative means always time, director fee, post directly, and in the same way preliminary expenses directly post it, and selling expenses related to sales only, and audit fee time to time you'll pay, so time basis. Like if you use the logic also, you will understand. There is nothing to by heart the problem. By heart or the table also. Just understand the logic, you will understand on which ratio you have to distribute it. Either it is time ratio or sales ratio or direct post. Okay. So this you'll understand. At the end of the day, just like the profit and loss account, you'll get 2 amounts. One is prior and post. Both the profits. Prior profit is this much, 8,250, and post is 5,750. That's all. Simple problem. Am I clear? If you understand, take out your textbook and work out any kind of problem you can try. And tomorrow, next class, I'll work out another important problem. How to calculate this ratio. If you understand next problem, it will be easy for you. You can work out any problem. Basic problem I taught you. Simple one, this one. Next problem, I'll take a little bit twist problem. Anyway, practice well. Check out the playlist and don't forget to share these videos. And have a bright career. and see you in the next class. Good luck.